What's up, family? It is Caden with Urban Finance. Today I'm going to take the time to explain the NASDAQ 100 to you. So go ahead and smash the like button and subscribe to the channel so you wouldn't miss the next video. Alright, let's jump in. The NASDAQ 100 is a basket of the largest 100 companies and most actively companies on the NASDAQ stock exchange. The NASDAQ stock exchange is made up of over 3,000 companies. The index includes companies from various industries except from the financial industry like commercial and investment banks. These non-financial sectors include retail, biotechnology, industrials, technology, healthcare, and others. The index is constructed on a modified capitalization methodology. This modified method uses individual weights of the included companies according to their market capitalization. This is done so no one company would make up too much of the index, which helps to reduce risk. To accomplish this, NASDAQ reviews the composition of the index each quarter and adjusts the weighting if the distribution requirements are not met. The NASDAQ 100 is traded through Invesco's QQQ. This product is designed to track the performance of the 100 largest companies on the NASDAQ stock exchange. Each company in the trust must be a member of the NASDAQ 100. Also, listed stocks need to have an average daily trading volume of 200,000 and publicly report earnings quarterly and annually. So the technology sector currently makes up 64% of QQQ, which can be synonymous with the NASDAQ 100. Cyclicals make up 20% of QQQ. Healthcare is 6.4%. Consumer non-cyclicals is 3%. Industrials 3%. Telecommunication services 1%, and utilities less than 1%. The top 10 companies in QQQ or the NASDAQ 100 is Apple with 11%, Microsoft just under that with 10%, Amazon, which makes up a large percentage of the consumer cyclical sector, at 7.6%, Tesla at 6%, Nvidia at 5%, Alphabet, the two different classes, Class C and Class A, for a combined amount just under 8%. Meta Platforms, which is Facebook as you know, at 3%, Adobe at 2%, and Netflix at 1.87%. This is heavily weighted in technology, and as you can see, these 5 companies make up more than 55% of the NASDAQ 100. So another thing to know is, like, unlike a stock that you buy and hold where you may not pay anything on, if you're holding an index like the NASDAQ 100, you will usually have to pay an expense ratio. The average expense ratio for the NASDAQ 100, especially in QQQ, is 0.2%, as you can see. And so for each $1,000, that will be about $2 a year if my calculations are correct. And for $100,000 invested into the NASDAQ 100, you will be paying Invesco $200. And that is if you're invested with Invesco. If you have $100,000 invested into something that tracks the NASDAQ 100, similarly like VGT, Vanguard, that I own, then for each $100,000, you will pay about $200 a year. So the NASDAQ 100 is made up of about 100 companies. There are sometimes Class A and Class C shares, which will increase the amount. I believe there are currently 103 holdings within the NASDAQ 100 right now. I do like this as a long-term investment, and that is certainly not investment advice. QQQ does pay a very small dividend, and that's good to know as well. So if you enjoyed this video, go ahead and smash the like button, subscribe to the channel, let me know your thoughts in the comment section below, and like I always say, God bless you, and remember to live your best life.